MC Laubscher here. I'm the Chief Cash Flow Engineer at Producers Wealth, and in this presentation, I'm going to share two of my favorite asset classes, life insurance and real estate, and I'm going to share with you why they are similar. You heard that correctly. Life insurance is very similar to real estate, and that's why they are both my two favorite asset classes. When we look at opportunities, and especially opportunities in asset classes, we usually run them through the alignment investment filter at Producers Wealth. And once they check all these 5 boxes, these 5 key areas of the alignment investment filter, we will then be able to determine whether the opportunity in a specific asset class is worth pursuing. Now, the 5 areas of the alignment investment filter is control, cash flow, appreciation, tax benefits, and leverage. And of course, from a very high level, both of these two asset classes, life insurance and real estate, they check all of the boxes. Now let's deep dive into the 12 different areas in which life insurance is very similar to real estate. Now let's start with real estate. When you are looking to purchase a property, and let's just say you have some capital to use as a down payment for the purchase of this property, and let's just say you have 25% of the purchasing price in capital to use as a down payment on the property, well, you're still going to have to finance the other 75% with a mortgage. Now, with a mortgage, there will be a specific number of payments that the purchaser would need to make in order to own the property free and clear. So with a mortgage, 2 very standard payment periods for a mortgage is either a 15-year mortgage or a 30-year mortgage. So with this property, there's a specific number of payments that needs to be made on the mortgage, and once all of those payments are made, then the property is owned free and clear. The same thing with life insurance. So with life insurance, there will be a specific number of payments in the life insurance contract that needs to be made. Once those payments are made, according to the contract, the owner of the contract will own the life insurance contract free and clear. So this is the first way in which life insurance and real estate is very, very similar. The second way in which life insurance and real estate is very, very similar with real estate and this property that you have purchased, with every mortgage payment, a portion of that mortgage goes to the principal, and then a portion of that mortgage goes to interest. Now, with every single payment that's made on a mortgage, you will build equity in that property. The same thing with life insurance. With every payment that you make on a life insurance contract, you are building equity in the life insurance contract. The third way in which life insurance and real estate are very, very similar is that you can access the equity that you've built up in your life insurance and real estate. Now, with real estate, you can access the equity in the property through a home equity line of credit. The home equity line of credit is established using the equity in the property as collateral. You could do the same thing with life insurance, where you can essentially set up a life insurance line of credit using the cash value, that is the equity in the life insurance policy, as collateral. So you can access the equity in both asset classes. Now, the fourth way in which life insurance and real estate are similar is that if you manage both asset classes correctly, you're going to see an appreciation of each asset. So with real estate, if you buy it correctly and at the right time and manage it correctly and properly and efficiently, you're going to see the appreciation of the value of the property, right? The price at which you could sell it. Now, with life insurance, if the life insurance contract is structured correctly, the same thing will happen. The death benefit should increase every single year. So the asset, which is a life insurance contract, appreciates in value every single year. So the death benefit goes up, and of course, the equity will continue to increase in the contract as well. Now, the fifth way in which life insurance is similar to real estate is the income that it produces. Now, with real estate, and let's just say the property is an investment property in which you have tenants that pay you rent. You collect the rent from them, and then you pay all of the expenses that are associated with the property. And at the end of the month, there is capital left over. That's cash flow, right? Positive cash flow. That is why real estate is a great asset. And that's why I really, really love real estate. With life insurance, it's very, very similar. So with life insurance, if you have your life insurance contract with a mutual insurance company, and it is a dividend-paying whole life insurance policy that is structured for high cash value and specifically for early high cash value, one of the benefits of having this contract with a mutual insurance company is that the policyholders are the shareholders in the mutual insurance company. And as a shareholder of the mutual insurance company, the policyholders get to participate in the profitability of the company. So when a mutual insurance company is profitable, and some of them have been since the mid-1800s, and they've been profitable every single year since the mid-1800s, you get to participate in the profitability of the mutual insurance company through what is known as a dividend. Now, the sixth way in which life insurance is similar to real estate is the tax advantages that both asset classes provide. Real estate is known for the incredible tax advantages that it provides, because you can essentially own investment rental real estate that produces income monthly and annually for you and pay no taxes legally. The same thing with life insurance. The growth in the policy, which is guaranteed in the contract, is tax-free. The dividends, which you will receive as a shareholder of the mutual insurance company by having this policy, this contract with them, is tax-free. You can access the capital, the equity inside of this life insurance policy tax-free. And then, of course, the death benefit that will be paid out to beneficiaries, whether it be a spouse or children or a trust, once the policy owner and policy insured passes away, is also tax-free. It has incredible tax advantages. The seventh way in which life insurance is similar to real estate is you can roll over the equity in life insurance and in a real estate property tax-free through, again, favorable tax legislation. So with real estate, you can essentially sell a property and roll over the equity into a property of a similar kind through what is known as a 1031 exchange, tax-free, and defer taxes forever. With life insurance, you can roll over the equity of a poorly structured life insurance policy to another similar kind of life insurance policy through what is known as a 1035 exchange. There are a lot of folks that have reached out to Producers Wealth that, for example, had life insurance contracts more specifically universal life contracts, index universal life policies that were structured very poorly and that was actually imploding. And we were able to save those life insurance policies by rolling over the equity that was inside of those policies into a dividend-paying whole life insurance policy with a mutual insurance company, tax-free through what is known as a 1035 exchange. The eighth way in which life insurance is similar to real estate is that both of these asset classes provide tax-free income. With real estate, most people are familiar with a reverse mortgage. And also with life insurance, you can essentially structure the policy that it could eventually be your very own private pension, and it will provide tax-free income for retirement. A lot of executive compensation packages in the corporate world is structured using life insurance. The ninth way in which life insurance is similar to real estate is that you could sell with real estate a mortgage note. There's a massive market for mortgage notes. And you can also sell a life insurance policy in a similar way through what is called a life settlement. There's also a massive market for life settlements. Banking and financial institutions, hedge funds, and very wealthy private individuals and families and family offices invest in life settlements. The 10th way in which life insurance is similar to real estate is that banks will lend capital on both real estate and life insurance. Most people are aware that banks love to lend money on real estate. What they're not aware of is that banks love to lend money on life insurance. This strategy is called premium financing. If you are a high net worth investor and have a net worth of approximately $20 million or more, this is a great option because banks will lend you the money to purchase a life insurance policy. The 11th manner in which life insurance and real estate are similar is that both provide a tax-free exit strategy. While many people are aware of advanced strategies through which real estate can be exited tax-free, there's not a lot of people that know that life insurance also provide a tax-free exit strategy. So essentially, when you pass away, the life insurance contract is no longer in existence, right? That's your exit strategy. And the death benefit of the life insurance contract will go tax-free to your beneficiaries, which could be your spouse, your children, or your family trust. The 12th way in which life insurance is very similar to real estate is that both of the assets provide control. You, as the person that owns or controls a piece of real estate or a life insurance contract, have an incredible amount of control, which is very, very different than essentially just putting your money in the stock market, also known as the Wall Street casino, and just hoping that the value of the equities in which you invested goes up in value. Let's take a look at this life insurance contract just to recap how life insurance is very similar to real estate. So with real estate, when you purchase the property and you take out a mortgage, a 15-year mortgage or a 30-year mortgage, you will need to make all of the payments for 15 or 30 years before you own the property free and clear. The same thing with this life insurance policy. The policy owner will need to make 30 years of payments of the policy. And then after 30 years of payments, the policy owner will own this life insurance policy free and clear. With real estate, with each and every mortgage payment, a portion of it goes towards the principal and a portion of it goes towards the interest. But with each and every payment, you build up equity in the real estate property. The same thing with the life insurance policy. With each and every payment here, you can see the cash value inside of the contract increases. That is your equity. And with real estate, you can access the equity through a home equity line of credit, also known as a HELOC. With life insurance, you can access the equity, which is the cash value inside of the life insurance policy, through what is known as a life insurance line of credit. Now, with real estate, if you do it properly, you buy it correctly and at the right time, and you manage it correctly, and you improve the efficiency of the property through improving the efficiency of the operations, the value of the real estate will increase and continue to increase. The same thing with the life insurance contract. As you can see, the death benefit, here the total net death benefit on the far right column, increases every single year. With real estate, especially with investment real estate, where you have tenants in the property that pays you rent, once you've made all of the payments on the expenses of the property, there should be money left over, which is cash flow. The same thing with the life insurance contract. As a policyholder of a life insurance policy with a mutual insurance company, you are the shareholder in the company. And as a shareholder, you get to participate in the profitability of the life insurance company, which shares this profitability to the policyholder through what we call a dividend. And as you can see, the dividend increases every single year with this contract. Real estate is one of those asset classes that has incredible tax advantages. It's one of the best asset classes from a tax strategy perspective. The same thing with life insurance. As I've shared, the growth inside of a life insurance policy such as this is tax-free. The dividends is tax-free. The death benefit that gets paid out to the beneficiaries, which could be a spouse or children or a trust, is tax-free. You can access the equity, which is the cash value in the policy, tax-free through a life insurance line of credit. And you can even take tax-free income from the life insurance policy. So life insurance has incredible tax advantages, just as real estate. With real estate, you can roll over the equity from one property to another property tax-free through what is known as a 1031 exchange. When you sell the one property and you buy a similar property, you can essentially roll the equity from the property that you sold into the property that you're purchasing tax-free and defer taxes forever. The same thing with a life insurance policy, where you can essentially roll over the equity from a poorly structured policy into a better structured policy, tax-free through what is known as a 1035 exchange. Real estate can produce tax-free income through the powerful tax advantages that it offers. And of course, life insurance policies can also provide tax-free income. You can sell a mortgage note on a real estate property. There's a massive market for mortgage notes. And you can also sell a life insurance policy through what is known as a life settlement. Banks will lend on real estate. They love real estate. Most people are aware of that. But what most people don't know is that banks will lend on life insurance as well. If you are an individual with a high net worth and have a net worth over $20 million, banks will lend you the premiums to buy a life insurance policy such as this. It's called premium financing. There are many advanced strategies through which real estate provides a tax-free exit from the property. One of the strategies is a 1031 exchange, as I have shared earlier. With life insurance, there is a tax-free exit strategy as well. You could take tax-free income from it, and when you pass, the death benefit will go tax-free to your beneficiaries. What I love about real estate is the control that it provides the real estate investor. What I love about life insurance is the control that this life insurance policy will provide the policy holder. There is incredible flexibility in both of these two asset classes. With real estate, most people know you can bring your ideas and you can bring your creativity to improve and increase the value of a real estate property. The same way with a life insurance contract. You can have the best structured life insurance policy, but if it's managed incorrectly and the strategy is not implemented and executed successfully, the life insurance policy might not work the way you wanted it to work. But if you bring your best ideas and your creativity and you follow through on the incredible strategies that we teach at Producers Wealth, this life insurance policy will do exactly what you want it to do when you want it to do it, even when you're not around. Thank you so much for spending your most valuable resource, your time, once again with me in this presentation.